The U.S. markets continue to reach record highs despite continued worries about tariffs and a possible recession. Our next guest says markets seem to be overly optimistic about growth and near-term inflation. Here to give us perspective is Jack Janasiewicz, portfolio manager and lead portfolio strategist, Natixis Investment Managers Solutions. Had to spit that out. Thanks for joining us today.
Well, thanks for having me back.
Why do you think the U.S. economy is continuing to hold up, even though we've seen weakness in the job numbers and there are still concerns about inflation?
Yeah, it's this tug of war between the idea that if we continue to see weaker data, especially on the jobs front, that we're probably going to see the Fed finally moving into that ease mode. And with the market already looking at 25 basis point cuts for the next 3 meetings as we close out the year, that's probably going to put a floor underneath the market. So I think from that perspective, that tug of war continues to go on and on. As long as you don't see a market deceleration in that jobs backdrop, that slow cooling, I think the rate cut backdrop will certainly be the panacea that the market's looking for there.
So what are you watching to see that there is a cooling demand? What have you noticed so far?
The key, I think, comes from 2 different areas, right? The first one, really the health of the consumer, and consumers' consumption continues to still remain fairly robust despite some softening there. I know maybe at the lower tiers of that income cohort, we're seeing some further weakness, but still when you look at who's really driving consumption in the United States, it's really the upper income bands, and they're still spending. And then the second one really is that AI CapEx spend, and the Oracle news that we just got overnight still seems to point to the idea that CapEx spending on the AI front continues in earnest, and until that starts to roll over, it's all systems go, it seems.
Yeah, Oracle really did provide a boost and a resurge of the AI thinking or AI mindset. So what do you expect from the Fed mid-September?
I certainly think that we're going to see that 25 basis point cut. I know the odds are certainly creeping a little bit into the potential for a 50 basis point cut. I think that's a little bit aggressive, especially when you still had some of the hawkish people on the FOMC finally starting to pivot. So from them to be able to go from being hawkish to simply going to 25 and then to 50, that's probably a big step to make. So certainly would expect to see 25 and a little bit of a dovish tilt going forward from the dot plot going into this.
So more along the lines of a 25 and then another 25 before the end of the year?
Yeah, I think that's the key, right? It's going to be the sequencing going forward, and that's where I think the market's going to start to look. And I think we should expect at least to have some consecutive cuts as we close out the end of this year.
How do you think a rate cut will affect the markets?
Again, I think that's where you're going to look at the sentiment factor there, right? Putting a floor underneath that backdrop. And I think that's probably enough to at least stabilize things. And at this point, we're certainly continuing to see earnings backdrop hold up just fine. And so I think with that sort of sentiment floor being put in because of the Fed sort of moving into that easing mode, that probably puts a little bit of the onus on a potential for a grind higher into the end of the year. So pretty much optimistic into the end of the year. Let's
talk about the parts of the market, the sectors that you like right now. Where are you looking to put money?
Yeah, I know there's been a lot of talk about this widening out of breadth, seeing more participation from something like the small cap sector. We're still a little bit reticent on that. We still want to see, I think, further evidence that the growth reacceleration is coming back. There's a difference between growth stabilizing at these levels versus reaccelerating, and I think that's maybe the key for that breadth widening out. Until we get to that point, we're probably still going to continue to favor up in cap, so large cap quality stocks. And I think you still have to tilt towards tech. That AI trade is such a big component here. And again, like I mentioned earlier, we're not really seeing signs of it slowing. So up in cap and still favoring that tech and growth segment of the marketplace.
Okay, so are you trimming at all? Have you been trimming with tech reaching highs? I mean, some of it is pulled back. At this point, did you trim before that?
No, we took a little bit off the table about a month ago. Maybe we have a little bit of a regret from that perspective, but for us, it was just taking a little bit of the chips off the table as we got into what we might be a little bit of a market chop and consolidation here. But from that perspective, we were basically just cutting our overweight back a little bit. So still leaning into that overweight in tech, large cap, but just took a little bit of those chips off the table.
And when you talk about tech and large cap, are you sticking to sort of the Magnificent Seven? Are you doing the energy play as a side to that? Can you tell me where you're moving to?
Yeah, it's still going to be, I think, in that large cap tech space. And the key there is just simply looking at those margins, the return on equity. Those are still fairly healthy when you compare that to the rest of the market. If you want to say maybe the overall S&P 493, yeah, they're compressing a little bit, but that advantage that we're seeing with regard to those sort of key metrics, that's still in favor of that large cap tech space and the Mag 7 space. So it's hard to really shy away from that sort of those kind of allocations at this point.
What about financials?
That could be another area where we see some opportunity. We certainly would expect to see the potential winners from AI going forward manifesting in a place like financials. We certainly would also expect to see some deregulation further down the line and maybe some consolidation. I know we've seen a few hints that the M&A backdrop might start to be picking up, especially from the railway side here in the U.S., but maybe that starts to spill its way over into maybe some of the regional banks, for example. So that's another area, I think, outside of the growth complex that maybe we'd be leaning into as well with some opportunity going forward here. So, outside again of that growth area, it's growth and financials that we actually would be favoring.
Got it. We will leave it there. Appreciate you joining us. Janasiewicz, portfolio manager, lead portfolio strategist, Natixis. Thanks for joining us.